What is up, guys? This is Chris, aka No Risk, No Premium, and welcome to another episode of the Sunday Sermon. Guys, today I am going to be solo dolo because we are celebrating the great holiday of Labor Day. And we believe that not a lot of people will be on the call. But you know what? We're still here to do the homework a little bit earlier than most. So hopefully you guys have some time after you hopefully spend some time with your family outside, barbecue and grilling, whatever it might be, to get in, get your homework done, and get ready for this week, which is going to be a short trading week, but still filled with quite a lot of things. All right. Almost every day this week, we have somebody speaking with Mr. I don't even know what to call him, fuck your puts anymore. Jerome Powell, chairman of the Fed, speaks Thursday. Excuse me. He speaks Thursday. Now that's later in the evening, but the last time he spoke, the market dropped like 150 handles or something. He used to be Mr. Fuck Your Calls, but now the Fed has pivoted to true QT, where they're actually starting to sell some of their their balance sheet, right? And they're actually going to be on schedule to do that. So right now, definitely more of a fade. The pop on the charts and on the strategy, the trend is going to be more down. I'll get to the charts later, but I do want to just let y'all know, look, what are we expecting this week, right? PMI Tuesday. Then we have Brainerd and Mester speak on Wednesday. Okay. Michael Barr speaks in the afternoon. Then obviously Mr. Powell here. Then we have what? Jobless claims. Okay. Excuse me. Excuse me, y'all. Jobless claims here. Obviously, jobless claims are important. Why? Because what does the Fed look for when they're using their toolbox to fight inflation? They look at inflation, they look at jobs. So it's good for us to know what the jobs market is doing. Okay. We finally saw a little bit of weakness last week with the jobs numbers. So we'll also look, will be interesting to me is just like consumer credit. Obviously, guys, we've seen debt in households rise pretty significantly. Okay. So what happens if people start getting laid off and they're heavily leveraged on the debt side? Bad things happen. Okay. Bad things happen. Just simple economics there. All right. So something to pay attention to is what is going on the consumer credit side. And then Friday, obviously, have three more Fed president speaking as well. Okay, so you'll want to pay attention when they speak. If they make hawkish or dovish comments, the market can move. Typically, market really likes to move significantly on this guy here, obviously Jerome Powell. All right, but it's good to pay attention. Okay, because you also want to know the tone because Powell at the Jackson Hole meeting finally really shifted his tone and was saying, he said the word pain. You will feel pain. All right. So if you're gonna feel pain, okay, that's not good. So basically, he's saying we are going to tighten until we hit our inflation goal of 2-3%. I think they're revising it 3-4%. We're not anyway, we're still double that. Okay. And it took us 2 years to double it. It's not just going to come down in 1 month because we tighten rates like that. All right. So this is going to be an ongoing thing, in my opinion. They're saying possibly no rate reductions even through 2023. We are in 2022. So if anyone tells you the Fed is going to pivot soon, should unfriend them. Okay. So that's what we have here for the for just the economic calendar and the Fed speaking. As far as there it is. As far as earnings that we can be expecting, GameStop 9.7, I believe that is the Wednesday. Kroger 9.9, that should be Friday. Yep. The GameStop one will be interesting. DocuSign 9.8. Don't love any earnings this week and nothing of really big significance here. Just be interesting because GameStop is a meme stock. Shout out JT Gladiator in our chat. He will be posting his earnings play this week. If you guys want to play some IV pump, I think the GameStop one could be a very significant one on both sides to play. So let's see what happens there, guys. Tap into either the small accounts channel or the ER Lottos channel. I believe they are one and the same now. Probably just going to be the small accounts. So check in there. All right. Check in there and see what he has posted. He should post it in the homework channel, but if you want to chat with him throughout the day, he will be in there. Okay. The Kroger one will be more so to feel what people are spending as far from a consumer sentiment standpoint. You'll want to see if they're starting to hurt, right? Because that's a sign of a slowing economy is the spending of the consumers and the health of the consumers. Okay. Now to the charts. Okay, and I want to do something a little different. I'm going to zoom way the fuck out. Okay, I'm going to zoom out. Here's why. Okay, here's why. Let me actually go to the daily so we can see. Well, first off, we are done with summer trading, which is typically known to be a little bit less liquid, and market sometimes usually melts up during the summertime. Okay. So what can we expect to happen? Well, look, we hit this 50-day moving average up here on the daily chart, rejected it very significantly, and pretty much just started knifing through a bunch of support levels. Now that we have, regular trading that's going to be continuing through pretty much the rest of the year, we could become have a little bit more volume because we'll have more participants. Usually the summertime is a little more of a lower volume. As you can see, what the summer started here about, I call it June. I mean, look at the volume trending really underneath its 50-day. This yellow line here you guys are seeing, this is underneath its 50-day moving average of just the volume, right? 50-day average of the volume. So all throughout the beginning of the year, staying above it. I mean, pretty much all the time staying above it, staying above it. Then we get to the summertime, June, and we really stay below it, stay below it. This last week or so, we've finally seen some pickup. So I anticipate a lot more volume. I do anticipate a lot more volatility as well. All right. But we can see what here just in the last week or so from the recent low, right? Recent low all the way up here to the high. We, excuse me, we pretty much bounced right off this 61.8. Okay, perfectly. First time, and we could see here it was also the top of this range that we stayed in for like a month. Okay, was this 390 level, 389, 390. Okay, when we finally broke out, we had a back test that was good for what? I mean, for the first round, a back test took us 390 to 416. Okay. That's not a bad liftoff. And we continued higher up to 431. So you want to say, look, almost fucking 400 points right here. Excuse me, 40 points SPY, about 400 SPX handles all the way up. So that bounce there was good for, 200 to 400 points. Great. Then we came down here and this bounce was good for 10 SPY points about, right? And we immediately failed that 50-day moving average and came right back out to test that level again. Also testing that trend line, from the pretty much from the low here that we recently was 362 trend line. We had a back test there. Okay. So on my watch this week, because we are underneath the 200-day on the daily, okay, we are underneath the 20-day moving average on the daily, and we are underneath the 50-day moving average, purple dotted line here. On the daily, we are in a fade the pop situation. Okay. But that does not mean you just get to short the open every fucking day. That is not smart. Okay. Because what'll happen is in true bear markets, there will be squeezes, and you're going to want to identify where these squeezes could happen. Okay. And they're usually going to be at more significant supports, supports that are kind of minor typically get melted through or don't produce a big bounce and only take a couple tries to get through. Okay, so how do we identify where there's going to be a big support? Let's zoom the fuck out. Okay, let's go here. Quarterly chart. Okay, looking pretty ugly so far. All right, but we can see what, right? We can see that we had a back test pretty much up near where we were leveling out up here, right? This 430 mark. Okay. Now, what do you expect? I believe by the end of this quarter, which is the end of this month, so this quarterly chart and the monthly chart will be very important. Okay, by the end of this month, I do believe we at least test the bottom of these closing and opening candles here, which is about 378, 79, 380 level, call it 380. Okay, and I ultimately believe we test that low 362 again and likely have a red quarter. Okay, I believe we have a red candle on the quarter. So that means that we close below what is this? 376-ish, 7, 8. Okay. Just call it below 376. Okay. So you guys all see where I'm understanding where we can get lower. Now, this monthly chart. Okay. Monthly chart is a little more interesting. This one paints the picture a little better. Notice how everything works in like kind of a box, right? Right. So from this box here on, February, March, April, 352, right? 352 couldn't get any closes above that. Okay. Couldn't get any closes below this 312, 314, 315 area. Right. And now when you come over here, we go May, June, July, August, couldn't get any closes above. So now we're creating this other box right here. So for me, the first price target at the bottom of this box without the wicks is going to be that 376, 377, 378. You guys following me? Okay. And then ultimately, if we create a wick down or a body that is going to have to finally break out of this box, okay, it would have to get below this 362. I think this month, this quarter, we at least test it and close near the low, okay, which into next month, outside of September is October, we could finally break down and see where we could test this. First off, monthly 50 MA, right? Monthly 50 MA 352. Okay, then leads me to my next point. Price target is right 350 to 356. Why? 50% from COVID low to COVID high retracement. We have the 200-day moving average on the weekly, 356. 50-day moving average on the monthly was what? We just said it, 352, right? So underneath 362, okay, we have 356, 352, 350, okay, 350. So you guys understand how I'm understanding the macro picture of everything, right? You zoom out and you understand where we can get to. So if we were going to pick some bounce levels for us to have some bounce, where there could be significant buying pressure and maybe have some short covering, because that's all the squeezes are, guys. They're short squeezes. They're buyers stepping in, forcing shorts to cover their position because they bounce, right? So you have to realize, where could that happen? Okay, we definitely think that could happen right here, right? I would call it 378 to 380. Okay, and why? Because that was already a very significant level here. Okay, excuse me. We've bounced out of 380 a few times. Okay, this last bounce out of 380 produced a nice move up. Okay, I think it could happen there. I also think it happened around this 370, 372 level. We do have a small gap to fill right here. I know it's small. Okay, but there is a gap there. Okay, there is a gap there to fill. I also believe there is a gap right here as well. I'm going to draw that in so you guys can see it. Just give me a moment. Oh, come on. There it is. Rectangle. Oh. Just get over there like that. Okay. So you can see here, there's definitely probably going to be a bounce at the 380 level, right? So that's what we've been talking about the whole time. 378 to 380, definitely going to be a bounce in there. And I think the next bounce will be down here about 370 as well, where we could get a pretty significant short squeeze. So depending what happens, okay, really depending what happens throughout, we had yesterday's session, today, the futures trade. I think it's a short day on the holiday today if they haven't finished up already trading. Then they start later on this evening at the normal time, which is about, it should be 6 p.m., I believe. So we should see, it'll be all about what happens. Do we get a pop for us to fade again overnight? It really just depends if we hold this 390 level overnight. If we break this 390 level, you could see really nothing underneath till that 380 that we want to target, right? So I have a line at 384 as well. I believe it was like a previous gap to be filled. So I would look at 384 as an area, but ultimately 380, I want to see trade for us to get a bounce there. I think that'd be a good way to get a scalp long there. Excuse me, a scalp long. And I want to see, the 50-day moving average at 401 right now, right on the daily chart. I'd want to see that hold as resistance, and where the 5MA opens up on the daily will be important as well. We closed at 392, might open at 392, might open at 390, might open whatever. We'll see if we want to stay respecting this 5MA, because ever since we really got underneath it, right? We got underneath after this run going up. We really went into it and faded. Now we went into it again, faded. So let's see what happens. That could be an area of interest to go short. Okay. So levels up are still going to be easy. 396. Okay. 50 days at 400, 401 area above there. You got 406. Take it about 410, 412 above. If we really want to get a short squeeze, bulls would really need to get above 412 for me to have any interest to think that there could be a possible trend change. Okay. But we are at this, 61.8 retracement level. Okay. Now, why 380 to the downside? So downside number is 380, 485, 380. The 380 level is very significant. It's hard to see. I know there's a lot of lines, guys. Look over here, 78.6 retracement. It's this yellow thicker line. Is right here at 379. Happens to be the bottom of the gap fill. So I would not be surprised if we get down there. It would also be a breakout and retest of that down trend line that we had earlier in the year. So I would not be surprised if that happens. Okay. Underneath there, you got 37. I would call it 375, 76, 372, 370. Okay, and 376, 376, 372, 370, 369 is the bottom of the gap fill, I think. Yeah. Under 370 is almost guaranteed. It's 362. Don't think it happens this week, but anything is possible. So you better be ready for anything to happen. Okay. So, guys, it's important we wake up early tomorrow, get pre-market highs and lows, get Friday's highs and lows, know where the 5MA is. Okay. And understand the trend is still down. And if you're going to take a trade long, it should be treated as counter trend. So that means you size down, okay, and you take your money quickly, okay? You get in and get out, okay? And have patience if we do decide to gap up, because the market loves to close its downsides gaps pretty quickly. I saw that on Friday, right? Pretty much a free fall. We couldn't get through that 50 MA. I mean, we dropped pretty much 100. I mean, we dropped, I think it was 40.20 to 39.06. That's 120 handles. All right. So be ready, guys. Long weekend. Okay. We're going to have more activity in the market because summertime trading hours are over. I really urge everybody to adhere to the 30-minute rule tomorrow as the market opens. Don't take a trade in the first 30 minutes. Let it show you where we're going to go. Like, I want to give an example from Friday, right? If you would have just waited on Friday, okay, you would have just waited on Friday. Okay, 1, 2, 3, 4, 5. Okay, you would have to wait 5 30-minute candles, which is 2.5 hours into market open. Okay, boo-hoo. But you would have seen that the market was showing you it's not going to get through the 50 MA. And we knew because Justin filled in for us on the 2-minute drill, which he did a spectacular job, by the way, that we were not going to get through. And that was a level to take puts at, right? A level to take puts at. So if you would have just had patience and didn't blow your load out of the open, okay, because look at this, down and up, like, okay, let's get to a huge, significant level. Let it show us, okay, and you just took puts from here. The moment you knew we broke below, I mean, realistically, the trade could have been here, but we broke below the opening range low. It was going to be a free fall all the way until that gap was filled. Then that gap got blown through. We just kept going. You know, I typed in the chat under 39.60 on ES. We free fall, took us all the way down another 50 handles from there to 339.06. So, guys, the name of the game this week is patience. Have some patience, especially out the open. Okay. Other than that, guys, I hope everybody had an amazing weekend. Nice long weekend, spend it with some family. Hopefully you got outside, but don't forget to get in. Okay. Do your homework, and I'll see y'all bright and early in the pre-market. Peace.